There was a growing number of uncompleted construction projects in China. The way they get demolished and crumble is like an omen. Will China's real estate market collapse like these unfinished developments? China's real estate market is rapidly cooling off, and along with it comes an economic downturn and a sleepless future for the average Chinese.
是我这样的错误了，我当初就是为了面子啊，大家看一下，为了和别人。
I bought this storefront for the sake of showing off. I bought it here with a loan of more than 1 million RMB. It's 2 floors, more than 140 square meters in total. Now this storefront can be rented out and can be sold. It's like a hot potato. I really want to sell it now. But even if I sell it cheap, no one buys it. Our family have to pay a monthly loan of nearly 6,000 RMB. It takes 30 years to pay off this loan. Just thinking about it makes me exhausted.
What can destroy the Chinese real estate market is debt, without a doubt. The most widely known case is China's second largest housing company, Evergrande Group. It has debts of more than $300 billion. Evergrande did not pay on time a bond interest of $83.5 million that was due on September 23rd, and another $47.5 million that was due on the 29th. On October 11th, Evergrande once again failed to fulfill a debt interest of $148 million. Evergrande is not a unique case among Chinese real estate companies. On October 11th, the Wall Street Journal cited estimates by economists at Nomura Holdings Incorporated that the debt of real estate developers in mainland China totaled more than $5 trillion as of June 2021. The amount has almost doubled compared with figures at the end of 2016. Among the $5 trillion debt, bank loans account for the highest proportion at 46%, while bonds account for about 10%, including $217 billion worth of bonds in US dollars. Several major Chinese real estate companies have already had massive financial problems. Take Fantasia Holdings Group company as an example. Its founder and largest shareholder is the niece of former Communist Party Vice Chairman Zhen Qinghong. Fantasia went public in 2009 after raising $400 million. The company's most recent market capitalization is about $415 million USD. Trading in the company's shares has been suspended since September 29th. Fantasia posted on October 4th that it had failed to repay $206 million in debt that became due. Fitch, one of the big three credit rating agencies, estimates that between now and the end of 2022, Fantasia will have to pay off nearly $2 billion in international bonds and nearly $1 billion in local market bonds. In the past month, international rating agencies S&P, Fitch, and Moody's have downgraded Fantasia's rating outlook successively. Meanwhile, several other Chinese real estate companies, including Citigroup Holdings Group, have also had their outlooks downgraded. Citigroup Holdings Group is the 29th ranked in the 2020 China Top 100 real estate companies. On September 20th, its share price plunged by nearly 90% in the Hong Kong stock market. It has been exposed that its employees are taking pay cuts, construction is halted, and it refuses to pay overdue notes. Another company in trouble is R&F Properties, which is also one of the top 30 leading real estate companies in China. According to the Hong Kong Economic Times, on September 21st, R&F's total debt reached about $51.4 billion as of June 30th. On October 11th, another one of China's top 100 real estate companies, Modern Land, filed with the Hong Kong Stock Exchange requesting more time to pay its debt of $250 million due on October 25th. A manager of a real estate agency in China told overseas Chinese media that there were at least 15 large real estate companies whose homes are best to avoid buying because they are all at risk of insolvency. These companies, a few of which are already insolvent, are now heavily indebted and are defaulting on home sale commissions to a number of real estate agencies. Those large companies usually have over $10 billion in cash on their books, but in reality, they cannot afford to pay back more than $1 billion in debt. it has led the public to wonder if their books are heavily skewed. In October 2021, Reuters quoted a JP Morgan Chase report that Evergrande Group had a large amount of hidden debt, accounting for 55% of the actual total debt and a net debt ratio higher than 177%. The JP Morgan Chase report shows that this is common among Chinese real estate companies. For example, R&F Properties, mentioned earlier, has an actual net debt ratio of 139% but shows 123% in its statements. Sunac has a net debt ratio of 138% but shows 87% in its statements. Country Garden, China's third largest housing company, has a net debt ratio of 76% but only shows 50% in its statements. The report says Evergrande does not include interest-bearing debt such as commercial paper, financial products, and capital bonds, with no fixed maturity in its statement. Evergrande and its peers in China have a large amount of hidden debt in order to avoid government scrutiny, especially concerning the 3 red lines imposed on real estate companies. Since it involves whether they can raise funds smoothly, they have been hiding their debt situation. The actual leverage of these companies is higher than the figures on their books.
我也注意到呢，最近这个网上的一些消息啊，总的看呢，这个一些大型房地产企业呢，生产这个运营过程中呢，面临了出现了一些困难啊，对整个行业发展的这个影响还需要观察。那么从整个房地产运行来看呢，今年以来呢，随着国家这个坚持各地区各部门呢坚持房住不炒的这种原则啊，持续的稳房价、稳地价、稳预期啊。整个的这个运行呢，整体上是保持一个平稳的这种态势。
Why are the debt ratios of China's real estate companies so high? The primary method of operating a real estate company in China is to borrow old debt to pay off the new debt. We have analyzed it in previous episodes, and the links to them are posted in the description below. It's important to note that if the Chinese government had not imposed new rules, that is, the 3 red lines, on financing for real estate companies in August 2020 and banned these companies from further financing, these massive debts would not have affected the wealth of individual owners of these companies. The Chinese media website Phoenix.com published an article on September 21st analyzing in detail the debt path of Evergrande Group. The profit of Chinese real estate companies is generally only about 10%, while Evergrande issues bonds in US dollars overseas with annual interest rates as high as 12%, 20%, or even 36%. In the world's developed countries, the interest rate has been low or even negative, with a zero interest rate being typical, and the interest rate of loans in Hong Kong is as low as 1%. However, Evergrande offered a bond with an interest rate of 10% in Hong Kong, which was shocking. The Modern Land Company, mentioned earlier, also has an interest rate as high as 12.85% for its notes. Since 2009, the accumulated net profit of Evergrande Group has been about US $26.8 billion. Yet, it has been paying big dividends year after year, totaling nearly $10.8 billion US dollars. Since 2011 alone, Evergrande's chairman has cashed out about $7.7 billion US dollars through dividends. The article writes that even though the early signs of Evergrande's debt crisis had already surfaced in 2020, the large dividends continued unabated. In short, it's equivalent to borrowing debt to pay dividends. The article on Phoenix.com does not mention that, for companies like Evergrande, where the top executives continue to raise money from banks at high interest rates while paying dividends, the wealth is not only amassed by corporate executives and owners, but they are only acting as white gloves to help the Chinese Communist Party's powerful elites to rake in the money. They don't need to bear the risk in the end.
没有着了，我只能怎么办呢？我只能把车卖了。这个我有一台那个保时捷，大概是120万买回来的，然后我是已经跟 4S 店谈好了，我就开了2年多，大概是2万多公里，我就准备85万卖掉。那我恒大逾期，我们不能逾期啊！我如果贷款不还，我就上征信，那我就是黑名单了。
郭总你好。
你好。那这样子吧，我明天去一下那个广发银行那边以后，我就直接开到你 4S 店把车给你了，就明天直接去办手续了，好不好？
好，可以。
好。
好，谢谢支持。好，明天见。
好，拜拜。
拜拜。
那这是我要，这是没办法的了，就一定要卖车，不卖车，因为恒大不给钱，我不卖车，我就没办法，所以就是我银行的贷款就没办法。
都想想啊，都流泪啊，一个人躲在被窝里面哭啊。
I hid inside the blanket alone, crying. It's exhausting to live for this long. I'm afraid to eat or drink or to buy clothes and shoes. I have worn the same stuff for many years. I'm afraid of spending any money.
现在啊，我真的是天天啊去上班呐。
Now when I go to work every day, I only think of making money, get a part-time job outside of full-time work to repay the loan. I work 12 hours a day. After work, I still want to go somewhere else to do a part-time job, to distribute flyers, to make a little money, because the loan is really too much. I haven't had any holidays.
The 3 red lines by the Xi Jinping government in August 2020 put a stop to this practice of siphoning off funds from banks and other channels. First, the cash to short-term debt ratio is less than 1. Second, the net debt ratio is greater than 100%. And third, the asset liability ratio after excluding the advance payment is greater than 70%. Real estate companies are required to make adjustments within 3 years to comply with them fully. This has led to a dangerous situation. Real estate companies are restricted in the financing, making it difficult to offset old debts with new ones. Many Chinese families are postponing the purchase of new homes. When homes are not selling well, the cash is not returned, and the capital chain is broken. The immediate consequence of the new policy is that as of September 5th, 2021, 274 real estate companies in China have applied for bankruptcy. Most of them are medium and small-sized real estate companies. The large companies that are currently plagued by debt are equally vulnerable and can't come up with solutions. For example, China Fortune Land Development, which was once ranked 8th in China's top 10 property developers, recently released its debt settlement plan after 7 months of negotiations. On September 30th, 2021, it announced that it would settle nearly $41.9 billion of debts, saying that the ways to settle them included selling assets, converting debts to shares, and postponing due dates of debts. However, industry insiders generally question the feasibility of such plans. Most of the assets that Chinese real estate companies have on hand are land, construction in progress, unsold inventories, etc. The book value of assets is calculated based on past related costs. For example, a few years ago, when the land price was high, plus construction costs and years of interest, the book value of assets had already ended up higher than the current market price. And in the current situation, where the market is cold, prices are down, and even the land auctions experience cancellation, these losses have to be borne by the people who take over the assets. In addition, given the general difficulties of private companies obtaining loans in China, using equity to finance is a common method for the industry. On the surface, it's a transfer of equity, but the actual agreement is that the real estate company will have to buy back these equity shares in the future. This is equivalent to borrowing money, and the interest on the borrowing is the equity premium. Whether it's Evergrande or China Fortune Land Development, many of their assets are this kind of debt, which are also called off-balance sheet liabilities. It's not included in liabilities, but rather recorded as equity, contributing to the inflated assets. Whoever buys this part of the assets will have to assume the liabilities. Unless a state company with a political mandate comes to take over, it's difficult for a private company to have the resources to step up and take over. Because of the current rules of the three red lines, it's challenging for private enterprises to raise funds from financial institutions. The frequent defaults of Chinese real estate companies has led to turmoil in China's US dollar-denominated debt market. Currently, some bonds issued in US dollars by Chinese real estate companies have plummeted as investors are dumping them. The market is already anxious about the ability of these companies to raise funds to pay off their debts. According to the latest data released by the International Institute of Finance, China's bond market saw the largest outflow in 6 months. In September, the Chinese bond market saw an outflow of $8.1 billion US dollars. 34.3 billion flowed into markets outside of China. All of this has created a vicious cycle. The entire Chinese real estate industry is facing an existential crisis with massive layoffs. Leading real estate companies have announced that they are laying off 40 to 50% of their employees. A report on a Chinese website said on October 10th that September used to be a peak season for property developers, but this September saw a significant drop in home sales despite developers slashing prices. Data from CRIC, the research arm of eHouse China, showed that total September sales of China's top 100 real estate developers fell 36% year-on-year. Among them, the sales of the top 10 developers like Evergrande, Country Garden, and Vanke fell 44% year-on-year. A manager at a real estate agency, Mr. Li, said, "Now that Scenic Property has blown up, just like Evergrande, its construction site has been down for a while, yet in June and July it was advertised heavily. Now, suddenly, it tanked. We are afraid to sell, afraid of unfinished properties. Now, it's almost in that state." On September 27th, the Monetary Policy Committee of the Central Bank of China held its third quarterly meeting of 2021. At the meeting, it was mentioned that it would maintain the healthy development of the real estate market and safeguard homebuyers' legitimate rights and interests. Some analysts argue that it's very rare for real estate issues to be raised at such financial meetings. This is because China's real estate crisis is probably at its tipping point. These crises seem to stem from the three red lines introduced in August 2020. Yet, the root cause is that during the 2 decades of rule by the former party leader Jiang Zemin, China developed the real estate industry in a perverse way, leading to a giant real estate bubble. We have already discussed this topic, so here is a summary. For more than 30 years, the Chinese Communist regime has implemented the so-called time for space policy, stashing more than 60% of the country's wealth in construction projects. Local governments rely on selling land to keep their finances afloat. Large state-owned banks that control the lifeblood of China's economy have massive loans to real estate companies and the upstream and downstream industries such as steel mills, cement plants, and aluminum plants. Young Chinese have put generations of savings into high housing down payments and are saddled with enormous debt. For those Chinese who still have savings, few investment options are available other than real estate. Nearly 3/4 of China's household wealth is locked in real estate. According to statistics from Rushi Finance Institute and Kantei Tokyo, China's real estate risk has surpassed that of Japan years ago. Shenzhen's residential home price to average annual income has reached 57.97 times, while Beijing 55.8 times, Shanghai 45.55 times, and Guangzhou 40.76 times. In contrast, during the real estate bubble in Japan in 1990, the ratio in Kyoto was only 18 times, so was Tokyo. China's real estate bubble is getting so severe that it will result in unthinkable consequences if it's not deflated in advance. Many cities in China where many homes are built have ended up as ghost cities with very low occupancy rates. It has exacerbated the already high debt of many local governments and put China's economy at risk of coming to a screeching halt.
自从2年前外国人走了之后
Since the foreigners left 2 years ago, this place has been depressed. Now it's so depressed that you can't see people on the street. When it was the busiest, you couldn't buy a storefront even if you paid a lot of money. Now, no one comes here. People have left. Foreigners have left. Chinese people have left. This is the headquarters of China North Auto Parts Company, building a green dream for the world. This dream is now shattered. In May 2019, the China Banking and Insurance Regulatory Commission, or CBIRC, issued a document calling to manage the chaotic flow of funds into the real estate market through shadow banking. In September of the same year, CBIRC called for resolutely curbing the tendency of real estate bubbles and guarding the bottom line that no systemic risk would occur. In August 2020, the Central Bank of China and the Ministry of Housing and Construction established the Three Red Lines policy. However, by this time, the debt of real estate companies like Evergrande had grown to $300 billion. If the CCP allows Evergrande to go bankrupt, it is likely to collapse the entire real estate industry and hit thousands of banks and other companies associated with it. If the CCP bails it out, it may slow down the economic collapse, but at the cost of allowing the real estate bubble to inflate further and the accumulated debt to pile up. More real estate companies in crisis will be waiting for the government's rescue, which will eventually backfire on the whole Chinese economy. Xi's measures are not necessarily wrong. It's just that if Beijing wants to deflate the bubble in a controlled and orderly manner, it may be too late. Moreover, it comes at the worst possible time. Since the beginning of 2021, China has been hit by a steady stream of disasters, including major floods. The extreme measures of COVID-0 have hampered the recovery of the economy. The Caixin Index, which tracks China's manufacturing sector, fell to 49.2 in August, marking the first contraction since April 2020. Meanwhile, the market value of large Chinese companies evaporated by $3 trillion as authorities tried to squeeze the virtual economy and move the real economy forward, thereby stifling the technology, education, and other service sectors. The debt crisis of China's real estate companies has opened a Pandora's box. The rapid cooling of the pillar industry has put the entire Chinese economy and political system in an unprecedented danger for decades. The government and the large corporations that have been colluding with it have made too many mistakes. Chinese people are most likely the ones who will have to bear the consequences.
哎，我再坐一下吧。最好一直坐在这个车上。挺伤心的，挺伤心。再见了。可以了啊。好。
大家看一下，这就是我在我们这上买的这个房子。
Everyone, take a look at this home I bought. This home has 3 bedrooms and 2 living rooms, more than 140 square meters. This side is a balcony, this side is a large living room, and this living room is also quite large.
现在想把它卖掉啊，但是这个房子的
Now I want to sell it, but it cannot be sold because no one wants it. Even at a price of 100,000 RMB, no one wants it. But it cost me 420,000 RMB.
因为大家看一下这个人流量啊。
Everyone, take a look at the traffic. There's barely anyone. This storefront is not particularly expensive. I can't rent it out for even 10,000 RMB a year, when the original purchase price is 3,000 RMB a square meter, with only 60 years of ownership. At the beginning, I borrowed 400,000 RMB with relatives and friends. The remaining 600,000 and interest, etc., a total of more than 1 million RMB. At the time, I planned to rent out this storefront, hoping you will be able to repay a little loan each year. But now it seems impossible.
这条街你看
You see, there's a park in the front, but no one is buying despite the park. I regret so much. Take a look. They're too empty there. The occupancy rate is not high. Windows with security screens are the ones sold. There are many without security screens. It means they have not been sold.